no investing or business landscape over the last 3 years, at least, if not forever, is devoid of uncertainties. How do you assess the current landscape in light of the fact that geopolitics is well and truly here, entrenched, and not looking like going away in a hurry?
Absolutely. And I think that most investors tend to be neutral on geopolitics, and which creates downside risks for the market. And what I mean by neutral is, like, whenever you're doing some modeling, you tend to assume that the thing that you don't understand will not change, right? So if you're doing, finding with what variables you should use for modeling a company or some macro, you assume that, look, this I don't understand, so let's assume nothing changes. And that's the reason why I think that most people are neutral on geopolitics. But the risk then is that something happens that surprises us. And there are experts, senior ministers, diplomats, ex-diplomats, whose take on the current situation is that this is a slow, long crisis, that this is not a blink and you miss it crisis. So this is something that will remain an overhang on the economies and the markets for a while. And that could actually be an overhang for the markets as well. And I think that the risks are not yet fully priced into the markets.
So because there are many facets, I started off with this particular thing instead of asking you a broad brush. Can I first take a leaf out of your answer and then maybe ask in some of the other questions that I have? So when you mentioned that there are risks to various facets arising out of this geopolitical scenario or quagmire that we are in, what is it that you're referring to? Where is it that you think the market is not taking full cognizance of the extent of the impact of the risk?
Right. So there is a generic comment and there is a specific comment. So let me start with a generic comment. The generic comment is, in the last 20, 25, maybe 30 years, we have become used to the state, right? And I mean the state meaning the governing infrastructure in the countries, having a responsibility to grow the economy. So we almost assume that the responsibility of the state is to grow the economy. In the last 3 years, since COVID started, or maybe a couple of years before that, we have started to see that that is not true. The first priority of the state is self-preservation, which is why the lockdowns during COVID were, of course, to prevent public health disasters, but also to prevent uncertainty, because when you have chaos, the state structures dwindle, and then suddenly a new regime can come in place. And that chaos or resistance to that chaos is the reason why lockdowns were imposed. Similarly, as we see regimes focusing on security, or not just immediate security, but future security, it is about the states negotiating power structures. And that means that economic growth is not first priority. Right? And that's a big change that has happened. And when senior experts say that this is a slow, long crisis, my fear is that it will not go away very quickly. On a very specific level, what this means is that you see restrictions on critical resources. So energy and civilization are very tightly linked. And underneath, and so if you keep drilling down, so you start with cars, then you go down to, okay, so you need rolled steel, then you go down to, okay, you need hot rolled steel, and then you need blast furnaces. But at the core of most supply chains is labor and energy. The moment you start restricting energy or restricting some critical inputs, you are deliberately slowing down the global economy. And what that means is that the aggregate output growth can actually be quite constrained. And so over and above the fact that the more you trade, there is more efficiency. It may hurt individuals or groups in specific countries, but overall it helps the collective humanity. And all of those assumptions and all of those trends are now reversing. The assumptions are now have to be questioned. And that's something that worries me, that we are not yet fully assuming, or not yet fully factoring into the markets. Now, that is not to say that there will not be opportunities. So even if the peaks in some of the markets may not be revisited for quite a while, there will be bounces that last 6 months and 9 months, and there will be sectors that can outperform. There will be sectors that will underperform. So there will still be opportunity. There will be enough to do in the markets, but this is an overhang which I don't think will go away for a while.